Sorry, I keep coming back like a bad penny, but I promise that you won't see me again on the stage for a while now. But this one is super special. These are our poster boys from across the globe who've come here today from various parts, have flown several hundreds and thousands of miles to be here with us today, and I couldn't be more grateful to all you leaders and gentlemen. Thank you so much for being here and for supporting Hope. I mean it from the bottom of my heart, ladies and gentlemen. We're going to try and spend the next maybe 40-odd minutes talking a little bit about the global perspective, and then some bit on India, and then some bit on your individual stories on your brands that you manage and run. Alan, can we start with you, since you're the closest to me, and alphabetically you come first anyway. Tell me a little bit about how have you seen 2023, just a summary of what you've seen from where you are perched.
Look, I think, good afternoon everybody. I think it's fair to say that what we thought at the end of 2022 was sort of pent-up travel demand, right? We ended up with double-digit RevPAR growth, we had the big year-over-year rollovers, and everybody hoped it was going to be more than business needing to return post-COVID. And I think it's fair to say as 2023 has rolled on, that's become a new normal. And the new normal, particularly for this market, but for the Asia Pacific in general and wider the global market, the new normal is fantastic. You know, we're back to the golden era of travel.
We love it, don't we?
We love it. I mean, if you look at across this stage or across global earnings in the last week, everybody's had record years of RevPAR. Everybody's had record years of signings. There has been more properties built, signed, and opened over the 2 years post-pandemic than there had been pre-pandemic. So while the industry had this dichotomy, right, you had investors that were bullish on the industry, they continued to sign hotels and commit to building hotels in low interest rates environments over the pandemic, and trading was terrible. Nobody made any money. Then we've had pent-up travel demand that's seen trading return to pre-pandemic levels, and now we're in an environment where those things are doing better than they ever have in any time in our history. Record openings, record signings, double-digit RevPAR growth. And you might look at it and say, yes, but trading cyclic, it's going to come down again. It was, where are we? 24 months for most markets, maybe 18 for China post-pandemic. And although the markets will eventually be cyclic, there's no sign of stopping. That's particularly true here in India, where the ground is more fertile than it has been any time in our history with the amount of infrastructure and build that's coming. So that's a long way of saying, I don't think it is pent-up travel demand. I think it is a new normal, and we've returned to what we in the industry always knew was a fantastic opportunity for us. And the one change is actually hospitality's gain has been a little bit of asset switching out of commercial and residential. People have realized the ability to monetize and price on a daily basis in our sector is unique to our sector and unique to the airline sector, and that is seeing more investment demand than pre-pandemic. And so in a weird way, COVID, in the end of it all told, has helped the industry and certainly helped the investment side of the industry.
So we've gone beyond revenge travel, I think.
Well beyond.
We're way beyond that. Raj, tell me, based on what Alan just said, what would you think are the key drivers for this resilience and growth that we're seeing in the sector?
So, Mandeep, globally, exactly what Alan said, you know, we seem to be, most of us are breaking every record. But my view is this is really now the time for Asia for next few decades. When you talk about resiliency, what we've seen just through last year, you know, when we looked at in Asia Pacific, our business intra-region and domestic, it used to be in the 30s to 40s range. Now it sits over 60%. That means 60% of our business is actually coming intra-region within Asia Pacific. right? And I'm excluding China to that. Add China, it's now over almost 75. And that's coming from a number of factors. You've got incredible emerging middle class across Asia Pacific. Just forget India for a minute. Indonesia, Vietnam, Thailand, these are all demographics that play in our favor. There's supply chain shift from China that's effectively helping many countries in Asia Pacific. And then you see governments investing heavily in infrastructure. And that is particularly true about India. You know, I've had the pleasure of watching India from inside and outside. And I keep saying what the government has been doing for the last 5 years, particularly in going, you know, heavily into infrastructure spending and opening up airports, roads and stuff. That's what happened in China 25 years ago. And once you start build this connectivity, people love to move. So that's the resiliency. And generally, from my perspective, I've said this numerous times, COVID reaffirmed the power of travel. Everybody, as we were all locked up in our respective homes, we all figured out nothing was more important to us than our freedom and ability to travel and spend time with family and friends, and that's what people are doing. So it's clear when you talk to many of our partners, the credit card companies and so on, that the experiential factor, the travel piece, is now a priority over many other spending priorities that people have, and they will put that first. And that's what you're seeing play out around the world today.
Hubert, you've heard both Alan and Raj on the sort of resurgence, and it's here to stay. We're going to see a substantive period of growth in the sector across economies, across geographies, etc. What do you think will be some of the most significant travel trends that are going to impact this industry, and you know how we need to strategize for them going forward?
Well, I think, firstly, Alan and Raj have already said quite a few, which are quite fundamental. One of them, the last point of Raj, I think, is to me the most fundamental point, is that there's a shift in the consumer priorities in their general lifestyle, right? And travel, which I think until quite recently for many generations was considered as a luxury, and therefore something that you would cut first in a time of crisis, and you would rationalize such expenses pretty rapidly, is not anymore. It's actually one of the top 3 priority of any consumer today. And I think that explains why all our brands, as different as they may be, are all doing well, right? Travel is part of any generation, any nationality, any culture's priority nowadays, and that's going to continue, right? So we're going to see more volume of travelers going forward. Now, linked to that, the way people travel and their expectation for their trips is changing, right? People travel more often on shorter period of time, and therefore they will prioritize a number of elements, be it the location, be it the purpose of the hotel, the experience you're going to get out of it, and so forth. But certainly, when people travel a lot and discover new parts of the world or return to parts of the world they know, their travel allocation is also changing. So yes, I travel a lot, but the hotel should not make the bulk of my travel budget, right? So I want an experience at the right price and in the right location. So, and that's where you see the growth of new brands. One of us is ours, but which are addressing this new trend, which I think is, again, global and probably only starting now in India, but it's only a matter of, I would dare say, month before you're going to start seeing a lot of our brands coming in.
Hubert, we are of course going to talk about your brand a little later in the conversation, and you know how you're looking at India. But Dimitri, tell me, there seems to be a new pricing power that the sector is witnessing. Is this something that you think that is here to stay, and the era of dropping rates is kind of over?
Look, I think people are not going to drop rates. I think a lesson that we learned is that those who keep the rates, they're going to be the winners long term. And this is a long-term game. Hospitality was never about 6 months or a year. It was always been a long-term game. The moment you drop the rates, it's very difficult to bring them back. I think that everybody realized that. The other thing that, in terms of rates, I mean, if you think of technology, right, what happened in the last 5 years or 3 years in COVID, we've never seen technology change our lives so much. We had more change in hospitality in the last 3 years than we haven't seen in the last 15, right? And COVID pushed us to do a lot of things that they were on the books and they were in our strat plans, but they never actually happened. From contactless check-in, digital journey of customer. I mean, all of these things, what have they done? They've actually given you tools to check rates, daily demand, hourly demand, actually change every minute. We all talk about the Taylor Swift line now in revenue management. You know, Taylor Swift announces her next journey across the world, rates go crazy, or the same with Bruce Springsteen. Actually, Bruce Springsteen is my favorite versus Taylor Swift, but anyway, I hope this is not broadcasted internationally. So all of these things together, they actually make asset management, they make technology as the key driver of what you do from a pricing perspective. So my simple answer, actually my extended answer to a very simple question is keep your rates, make sure that you use the tools that you've got in your possession, make sure that technology becomes a key component of how you make pricing decisions, and please, and please, and please, read what is happening out there. You know, people tell me, oh, have you got a 5-year plan? I'm lucky if I have a 5-day plan. You open up CNN and suddenly you get a curveball or a geopolitical challenge and your plan goes out of the window. Yeah. So rates are not somebody's kind of business in a small office somewhere in the back office of a hotel. It's a bigger game, geopolitical, it's events, it's what is happening with your concept, it's what Mike and SDR are telling us every single day. So it's not as simple as it used to be in the past. It's more a complicated game, but keep them steady. And remember, this is a long-term game, it's a marathon, not a sprint.
Yeah, it is a long-term game, no doubt about that. Michael, you heard Dimitri, and generally I'd like to ask you on what are you seeing from where you are on the profitability of hotels? How has that changed, if at all it has?
Yeah, so, sorry, just to kind of introduce, because I kind of feel like I'm not one of the operators, but I help these guys and many of the other audience members with benchmarking and optimizing the profitability models of the hotels. So I did a presentation this morning for the closed group of owners, and I felt like this was one of the first presentations I've done in a while where it was almost all positive. Quite unique to India in the fact that, you know, I'm presenting all around the world and the outlook is either incredibly positive from a top line perspective, that is pretty much the case across the globe. But there are real challenges with the cost lines, with some of the revenue streams where maybe, like for instance, conference and banqueting revenues haven't returned back to those 2019 levels. Food and beverage has seen a slowdown as there's so many more options for guests now outside of hotels. And therefore, the total revenue picture looks very different to the RevPAR picture for the first time in some time, right? And then when you hit the cost lines, high levels of inflation, challenges around energy costs in certain regions. The profitability picture is so scattered. And actually in India, I think the brilliant thing that we've seen here specifically is that pretty much all of that top line growth has been able to be captured and drive the profit margin in a way that you really don't see. And many countries around the world would be very envious of it. Because I think COVID saw the first time that many operators would have gone through like a zero-based budget process, almost like stripping out those cost lines and really well prepared for this immediate ramp up. We saw this hockey stick growth that happened as soon as the doors were opened. And the big differentiating factor, I think, here as well was that it was actually corporate-led here. The domestic market drove the corporate demand back, where the rest of the world, it's basically been very much driven by leisure, followed by corporate. And I think that drove a whole different dynamic because there is still more to come. The trends that we're seeing, if you look on a 12-month rolling average, yes, revenues have slowed. They were inevitably going to because we couldn't continue this hockey stick. But it's still on an upward trajectory, and the cost lines have been maintained. So we've seen, since 2019, a 6 percentage point increase in GOP margin in India. The wider region has also, by the way, seen pretty significant improvements in margin, but it's not finished yet. There is still more to come, and the reality is that the protection of the cost lines and the ability to be able to shed costs. One of the comments this morning, by the way, I thought was fascinating was the reduction of, or the improvement of productivity. So the amount of staff members you need in order to be able to serve the amount of guests you have in the hotel has improved dramatically in this region, right? It improved like 20–25%, but it's still nowhere near the levels that you see in places like Europe or in the US. So we know that there are further efficiencies as technology improves, as some of the kind of the M&A happens in the region, some clustering, centralizing of costs. That there's still more to come out of the cost lines, and there's still more to go on the top. So actually, unfortunately, for the first time, I don't have many negatives as a kind of be careful of this area, because actually I feel like Indian hotels are generally being operated very efficiently, and the revenue is still in a positive trajectory. So I'm very positive with the outlook at the moment.
That's music to a lot of ears. All the upside that still has to come, and the lot that we've already seen in the past couple of years towards bottom line. Alan, I'll come back to you. Ending 2023, Hilton had the finest development quarter ever in its history, and you have a pipeline that you signed of close to 1,000 hotels and counting. So it's been an absolutely record-breaking period for you guys. There've been new brands, Spark and Live Smart. So what, in your view, are going to be the markets to watch out for, and what's the sort of segmentation that you think will see the most growth?
Look, I think we have a tendency to think, particularly of this market, is India as a mature market. But when you contrast the rising population growth, the rising population growth, the buying power of the domestic market and the middle class to its peers, and its peers being China and its peers being the US, India becomes the third largest lodging market in the world in the decades to come, and you're certainly seeing that accelerate. So I think in this market specifically, the pyramid is yet to be built out. If you think of the hospitality market as a simple pyramid for uber luxury at the top, to the bottom of the pyramid being, organized, focused service hotels, which everybody on the stage has a version of, there is parallels to Raj's point on infrastructure. There is parallels in the India market where hospitality and resilient hospitality follows infrastructure that is going to see an explosion in this market that I don't think we can contemplate. And everybody for years has said it's not if, it's when in India, right? At some stage, India becomes the third largest lodging market in the world. At some stage, the Indian travel and tourism scene explodes. But what happens in the future here is what happened in the 50s in the US with the superhighways, is what happened in the 80s in China with Belt and Road and fast trains. If you look at 7,000 kilometers worth of track here, if you look at the expressways, none more important than here of Goa, if you look at the airport build, it's that infrastructure that facilitates domestic travel demand that is going to be the sort of bellwether for the future. So I don't think it's as much as what markets are going to be hot. Nothing's going to sort of beat domestic China, domestic India. It's how do you build out that pyramid? And importantly for this room and for all of us as an industry, how do we make sure we have truly differentiated layers and a robust industry at returns at all levels? Ultimately, hospitality is a real estate business. Hilton and everybody on stage will say they stand for best-in-class owner returns. Well, to get best-in-class owner returns and to have the industry that India deserves, there needs to be a return, in my language, a return for a Waldorf Astoria, as there needs to be a return for a Hampton. And for that to happen, you need a differentiated product shelf and a differentiated pricing shelf. So there's no debate that we'll get there. But if we don't want to have compaction and cannibalization, we need to make sure that our levels in the hotels are globally benchmarked, not India benchmarked. A 5-star luxury hotel in India needs to be at the same pricing power that that international customer or the Indian outbound customer plays globally, which means $500 a night, not $300 a night, or we will end up with a false start that everyone will pile into the market. People will not get the returns they need. We'll start to see hotels churn, which is bad for the market. So I sort of answered your question differently. And one of the things that you see in markets that are expanding that quickly is to make sure that our pricing is internationally benchmarked, and so our industry ends up, yielding repeat owners that are building an asset, building another asset, building another asset, and that's very much in the control of the general managers in this room, very much in control of the brands in this room and the operating companies to make sure that there's integrity and honesty in projects and in builds, and with help of companies like your own and with companies that work with HotStats, making sure that the hospitality class, and hotels particularly, remains AAA investment. It has the demand at the moment, has the appetite, has the fertile ground, and for the first time, it's got big capital funds trying to get into this market. The onus is on us to make sure it grows at a sustainable pace and to make sure that our products are aspirational and they're aspirationally benchmarked to what that international traveler wants to pay, and critically, what the Indian outbound customer is paying when they travel overseas, or we will end up stubbing our toe, which in fairness to our wonderful market, we've done a few times in the past.
I'm going to ask you a little follow-up question on India with interesting new announcement today with Deepika Padukone becoming your brand ambassador.
Yes.
What's the thought behind that one?
Look, I need to take my own medicine here, right? If you are anyone on stage and you're in the hotel management business, you have to start in best-in-class owner returns. If you're going to do best-in-class owner returns and stand for it and make sure that you're having repeat buys, you need to make sure that your systems are as powerful as they need to be. And if I think of the way customers are emerging, and I think of our relatively smaller footprint in India, I need to make sure that we're punching above our weight, and that Hilton in India, despite a scale disadvantage, punches and performs to the same market share premium that it does in Hilton in any one of my markets in Asia. A way to do that is to incentivize the top line. And so there is a customer, we're doing two things, right? So there's a lot of out-of-home media I'm doing this year to make sure that I'm servicing our owners in the way they deserve to be serviced and serviced a loyalty program. Some of that's table stakes that we haven't done well in the past, but there's also an emerging Indian customer that is heavily influenced, perhaps in India as much as in the US, by influencers. And so what better influencer to have than Deepika, who has an affinity with us in some of the work that she does for communities, has an affinity with us in integrity, and has a huge following. So let me put it this way. Deepika picked us more than we picked her, and we're thrilled for her to come on board.
Lucky you. She picked you.
Me personally, that would be lucky me. But
Raj, Alan spoke a little bit about loyalty programs. There's an interesting question that I want to ask you is, you've of course seen again a gigantic growth in Asia Pacific, and I'm excluding China for a minute. You're also reasonably well established in India with over 150 operating hotels and counting with your pipeline. What's the thought behind the outreach that Bonvoy is making to hotels or asset classes outside of the Marriott fraternity? Tell us a little bit about what's the thought behind that.
So, when we basically acquired Starwood, we had two very strong loyalty programs, Marriott Rewards and SPG. And I continue to say we had a lot of learnings from SPG. What SPG did really well was some of the experiential elements. So when we launched Bonvoy 5 years ago today, we brought best of both together. Bonvoy is pretty much around 200 million members and growing. In Asia Pacific, our local membership base, just in my world, has surged 50% since 2019 alone. right? India today has well north of 6 million members. And one of the big things, what we've been focused on, is creating an ecosystem where our members are finding it sticky enough to stay with us all the way through. And this is not just hotels, it's the experiences we provide. So I just came back a couple of weeks ago from Aussie Open in Melbourne, and Australian Open that we've been sponsoring for a few years now. Just this year, our members burned 14.5 million points. You know, and these are money can't buy experiences. When you walk through the back of the house at the Aussie Open, you're meeting some of the, you know, Djokovic's of the world and engaging with these folks, sitting by the courtside. Similarly for Grand Prix. So, you know, we talked about Taylor Swift. A number of others that we've been very closely associated with. That to us is critically important to create this stickiness in our program that people love to be part of. And that's what we are seeing, that literally month on month we are signing millions of members that want to be part of the system. And then take one step further. In the US, we offer insurance programs. We have a very, very strong co-branded credit card program in the US with two companies, Chase as well as American Express. We have a very strong credit card in Japan, and we just launched last year in India with HDFC. And again, initial sales are going really well. And this is what I call as ultimate loyalty, where people are going to basically put their everyday expense on the credit card and then use it at the hotels, be it in Maldives or one of the other properties. So for us, you know, because we have this incredible platform, well north of 50% of our bookings are coming from our loyalty program. And that pretty much guarantees our partners and us, you know, what we are able to drive in terms of top line. Ranju and her team this last year, you know, drove over 9,000 crores of top line in India alone, and this is just a managed portfolio. So loyalty program to us is the core of what we are all about, and that's the reason Marriott Bonvoy is the connector.
Wow. Hubert, the whole world is looking at young, contemporary, trendy, tech-savvy, interactive, boutique, mid-scale hotels. All the big boys have entered that space or are entering that space. You're a young brand. You've made some great signal. I'm talking about the brand. I wasn't talking about you, but
Yeah, I was just like, seriously.
You've made some significant, you know, strides in opening YOTEL in some of the world's key gateways. What is it that you do differently? What's the pitch that gets somebody to sign a YOTEL?
I dare say everything. No, when we started YOTEL, I'm not a hotelier. My investors are not from a hotel background. And we all looked at it, we all looked at the industry and thinking this is a great industry, but it's an inefficient industry in many different respects. And so we thought maybe there's an opportunity to do hotels differently, right? That's how it all started. And so we started looking at the different pieces of what makes this phenomenal industry and where we could potentially improve some elements, right? And it started with the real estate. You know, I've developed many projects in my life, and I never did hotels before because I felt they were the most inefficient piece of real estate out there. And they consume a lot of energy. Most of the area is non-sellable. They require a lot of staff, and the revenues are variable, right? Why do that when you can do an office building or a residential building and so forth? So how could we design the hotels differently so that we just deal with this? And actually, it's the simplest part, right? We just removed anything that was not necessary from the hotels, right? And bearing in mind who we were targeting, right? And we were targeting a young consumer, traveling a lot, not that loyal, looking for new experiences, kind of cost-conscious, and very urban. And for that person, we thought, well, our role as a hotel is to connect that consumer with the markets we're in, right? By being in the right location, giving them a great hotel experience, but we don't need to give them 6 different types of F&B outlets because we're in cities where you have the best restaurants in the world, right? We don't need to give them recreational facilities because they're only going to be with us for like 2 days. They don't have time for it. Perhaps you should go to a health center, which we provide, but we will not go further than that. You know, you don't need to have bathtubs, you don't need to have like all sorts of facilities in the rooms when people don't stay for long, and most of the time they're with us, they're actually not with us because they're in the city gathering and wandering around, be it for business or for leisure. So we kind of started redesigning the hotel this way. But at the same time we thought, you know, this has to be qualitative, right? It has to be a high-end experience. You don't want, nobody wants to be in a budget hotel, right? Our view is that you're in a budget hotel by default because you don't have the budget to be in a better hotel. So how do you create an experience which is affordable, but is also aspirational, and you feel good about it, and you don't mind telling you're there, and you don't mind bringing your customers, your guests, to stay there. So we invested a lot into the fit-out, the design of the hotels, and make them feel good, and so forth. And then beyond that, we realized, okay, so how does our young and not so young consumer actually travel, and how to make their stays more efficient as well, right? How do we address the fact that they're always on the go, always moving from one place to the other, and the last thing they want is to waste their time with administrative issues, queuing to check in, waiting for their room to be ready, waiting 20 minutes to get their bill when they check out. Happens all the time. How do you just remove all of that? And we thought, well, the one way to do that is just to embrace digitalization. Embrace technology. And it sounds very normal nowadays, but I can tell you when we started over 10 years ago, we were really looked upon as like renegades, right? I mean, like technology was really not part of the hotel experience. When we first started introducing kiosks for people to check in, I've heard it so many times, like to people that is, you have no idea about hospitality, which is kind of partially true, but it's beyond the point. What we understand is our consumer and how they function and what they want. And actually nowadays, we've kind of fully digitalized the CRM process from pre-check-in all the way to checkout, right? We're not forcing our customers to do it. They can deal with our team, with our crew. They can, there's absolutely no issue. But it's available for them. And you know what? Depending on the markets, depending on the city, between 70 and 90% of our consumers actually use it. That's how they do it. It's just easier, better. And if you think about it, I don't know how many people actually do a formal check-in when they take an aeroplane. I don't know anyone. I mean, you always do it through your smartphone, and it's smooth and it's enjoyable, regardless if you travel in first class or in an economy airline. So, we've introduced this element and technology not just for the sake of it, but just to facilitate the stay. It also allows us to operate hotels in a much more efficient manner, right? So we still have crew, right? A lot of people think our hotels are fully automated. There's still people working in our hotels. But we've completely changed the job description of our crew, right? They look after our customers. They're not just doing simple functions. They are multitasking, ensuring that our customers have got a great stay with us, right? And similarly, we're able to operate a lot of our hotels off property, right? We were able to centralize pretty much all the services, administrative, revenue management, sales, HR, etc., from central's office on the other side of the world. It doesn't matter. Which means that you don't need to build useless offices into your hotels, going back to the real estate theory. And at the same time, we run the hotels much more efficiently, right? So we've tried to kind of, reinvent some parts of some elements of the hospitality industry, bearing in mind what we call this go generation, these people which are always on the go and traveling and what they require.
Fabulous. I stayed at the YOTEL in New York, in Manhattan, and I thought it was a great product. And with some tweaks, like providing a bottle of drinking water in the room, you could bring it to India as well. So how are you looking at the Indian market? Is it time for YOTEL to be here?
So you were lucky. You stayed at our first YOTEL. And we got most of it right, but not all of it right. And we've learned a lot from it. We were quite fortunate that our first hotel was 700 rooms in New York. And we've learned a lot from it in many different respects, operationally, design-wise, technology-wise, et cetera, et cetera. But what we've also realized since then, when we've opened 23 more hotels, and we're about to open another 14 hotels on 3 different continents, is that we should not have a cookie-cutter approach. It's a choice we made. We have a strong DNA in our design. We have a very strong view on how we should operate our hotels. But should all our hotels look exactly the same? Probably not a good idea. Probably because we're not the size of these guys, where we have 180 million consumers with us. And we have a lot of our hotels, most of our hotels target typically 60–65% of the customers are domestic, and the rest is international. So once you have that in your property, you have to appreciate your domestic consumer requirement and make some tweaks without diluting the brand ethos, but taking some elements into consideration to make it work. Having said that, and I hear it in every new market we enter, which happens regularly, and I'm always told, what you've done in New York will probably not work in my market. And I always have the same answer, which is, you're probably too old. Because my consumer, I can see it in your market, I can see it in India, the same way I see it in the US, the same way I see it in London, or the same way I see it in Dubai, right? And they're young, dynamic, they're digital driven, they're completely the same. Actually, one of the best match in terms of consumer we have is in Asia and in the Middle East, even though we started in the US, right? So I'm not too worried about it.
Fabulous. We'd love to see a YOTEL soon in India. Dimitri, let's talk about, you're soon going to have 100 hotels in India. It's a market that seems to be doing very well for you. In fact, the amount of press releases I get from Wyndham, I'm really wondering, at the scale and the speed at which you're growing on the franchise platform. So tell me a little bit about what's going right in India and what are the hurdles here?
Look, I mean, for us, it's very simple, right? I mean, allegedly, we are the leaders in economy, budget, and mid-scale. We are going to announce our results in a few hours in New York. And we open 1 hotel every day, including weekends, in 2023. That's our business, right? There's going to be 1.9 billion people who are going to travel in 2024. There's room for everybody, and this is where we all fit in. That's why you see so many smiling faces. I mean, I don't know about Mike, but the rest of us, we're very, he's a friend of mine, I can say that. So there's enormous opportunity everywhere. It's not just about India. I know that we need to talk about India because we are in India. But what is important for us in India is not just about the number of hotels we're going to have here. It's the outbound market. What I'm excited, I was in Istanbul about 3–4 days ago, and I was talking to my Turkish colleagues, and I said, have you realized in the next 5 years there are going to be 300 million Indians who are going to travel around the world? 300 million. So it's not just about how many hotels are you going to have in India. What are you doing about the source markets? What are you doing about the 300 million Indians who are going to travel around the world? Because Air India is going to have another 400 planes, the whole story, what Alan was talking about, infrastructure development and all that. So for Wyndham Hotels and Resorts, India has a twofold on our strategy and importance. How many hotels are we going to have here? What kind of brands? Where are we going to put them? Religious tourism for us is big. I believe that we are the ones who started the trend, and it's debatable, but happy to have the debate during the coffee break. We started at Tier 2 and Tier 3 cities. We now have a presence in 40 cities in India. But for me, that is important and absolutely critical, but what are you going to do to cater for the 300 million people, middle-class Indians, who are going to travel around the world in the next 5 to 10 years? I don't know if you know, but I found a Greek restaurant in Goa. Yeah, really? I did not exist there. I put it on my Instagram. I had about 100 likes. That's how many followers I've got. I'm not very popular, but anyway, I found this Greek restaurant called Thalassa, which, by the way, you can go. It's amazing. It's like very close to my mom's cooking, so that's a big statement for me. So I found this amazing restaurant, and we had dinner with my team. And I've got the pleasure of, like Hubert, you know, young people in my team. And I said, guys, what is happening here with the interest rates? You know, you're newly married. Are you buying homes? Are you buying flats? And they said, no, we cannot afford it. I said, oh, what are you going to do? He said, we're going to travel. People, and there were 5 people in my team yesterday that were at dinner. 4 of them are at the age of 28 to 30. All 4 of them said, we're not going to buy anything. We're going to experience. We're going to travel. We're going to go abroad. We're going to open our eyes. We're going to widen our horizons. And we're going to have fun. That was the best thing I've ever heard in a long time. I went to bed and I said, you know what? There is hope. There is hope.
There is hope.
There is hope. There is hope. I mean, okay. On the flip side, it's my daughter, my 26-year-old. I asked her what are her plans for 2024, and she said my plan is to retire. So that's the other flip side of the young generation. They don't necessarily want to work. And I said, do you mind if I retire first? So you know, and the answer was no. You have to work, so I can retire. Okay. So the important thing is, grow in India, bring the right brands, grow in tier 2, tier 3 cities, take advantage of the infrastructure development that's going to happen, take care of the 300 million middle-class Indians who are going to travel around the world, bring the right loyalty members, bring the community, make sure that you cater for them, and we're going to have an amazingly bright future.
Fabulous, Dimitri. As always, you are such a riot. Michael, you made this fabulous presentation in the morning for the Owners Conclave on profitability. Tell me a little bit about how can owners use data more effectively and get more efficiency out of it?
Yeah, so, is it working? Yeah, I think for me, well, look, the response this morning was a clear kind of indicator as to where things have moved, right? I think the pandemic, for all of the damage it would have done, it actually helped in lots of different ways. I spoke about zero-based budgeting earlier, but also the move away from just focusing on selling bedrooms and this kind of, you know, the fact that we are, you know, as an industry, so focused on maximizing rate for a bedroom, but not, you know, necessarily benchmarking the rest of our business, which is, of course, where we come into it. But it's also then the gap between that kind of top line and then the cost lines, because in many cases, you'll be looking at celebrating a 25–30% ADR growth versus 2019. But like in places like the UK, for instance, where profitability's gone backwards 3 percentage points, right? So you could be celebrating this top line success and at the same time seeing erosion in your margins. And across the globe, that's, you know, there's so many different ins and outs of those stories. In India, for instance, one thing we looked at earlier was not just the asset classes, but also the brand scales. So at the moment, the segment that's seen the biggest improvement is the lower end segments. It's actually the mid-scale segments and below, and of course the select service, limited service asset class model. And that has come from, you know, various different factors. And I think that the reality with benchmarking is if we look at one thing in isolation, it'll always be misleading. So I actually think that the first thing is that we should never be looking at just one level of metrics. It should be the spectrum of metrics. And I'm not just talking about profit and loss data, which is where we focus, but also, you know, the guest trends, whether it's, you know, what's happening with consumer trends across the globe and how they might impact. And more importantly, it's benchmarking the ongoing movement, the direction of travel, rather than trying to look at one point in time and say, right, the best model that I could be building right now, or that if I'm repositioning or rethinking what I'm doing, this is at this moment in time, this is the best thing, because actually, it's about that direction of travel and how things are moving. So whenever, the way we work with most of the operators will either be in the feasibility underwriting side of things, so pre-development, or it'll be in the ongoing performance where at a corporate level, at a top level, or in the individual hotel level, they can monitor their own metrics right the way through the P&L on an ongoing basis and see if the gap is widening or shrinking between them and the competitors. Set the strategy around those areas of opportunity, maximizing the areas they're doing well, and then monitoring the output of it using data, using fact. You've seen my title slide is always that provocative, without data, you're just another person with an opinion, right? And you need to combine that with the opinion, because without it, you're just another guy with data, right? So you need to have the two things together in the ongoing business, and it can't be just something you look at now and again, right? It's something that needs to be ingrained in the business for me.
So I heard feasibility. Leave the feasibility to us. The rest you can take care of. No worries on that. Ladies and gentlemen, it is very rare to get celebrities like this together on stage, and I could keep talking forever. But all good things must come to an end. Thank you very much, all of you, once again, for traveling halfway across the world to be here on the stage and talking and addressing your thoughts to the audience here. Last word to Dimitri.
No, I traveled from Chennai, so
We take that away.
yeah. So don't. Yeah, I don't need that credit.
Thank you very much.